Okay, back to our top story now. President Trump's federal income taxes. The New York Times reports that the commander-in-chief paid almost no federal income taxes recently, and that he may be under severe financial pressure in the next few years, with hundreds of millions of dollars in loans reportedly set to come due. So we want to note that CBS News has not verified these findings. This is a New York Times report. Rebecca Walser is a tax attorney and president of Walser Wealth Management. She is in Tampa, Florida, and she's here to help us understand what this all means. Because the thing about it, Rebecca, is that, there is a difference between what people might find a distasteful use of the tax system versus doing something illegal. And the president has kind of bragged about his ability to work the tax system. In fact, he kind of used it as proof as to why he would be a better person to fix the tax system. So let's break down some of his things, and we'll start with the most recent years, right? The New York Times claims that President Trump only paid $750 in federal income taxes in 2016 and 2017. So yesterday he denied the allegations, saying that he paid a lot. That's his quote. So if he took the $400,000 White House salary for being the president and broke ties with his businesses the day that he was sworn into office, which is what he said he was going to do, how would it be possible to pay such a small amount on the IRS? Could you still get away with just paying $750?
Well, it depends on exactly how his salary is getting paid. We know that he said that he donates his salary to charity. So often, like when we sell a stock, we can basically give the appreciated stock to the charity and not pay capital gains, so they get the full stock and we don't pay any tax. If his salary is actually being redirected to a charity, then he wouldn't be getting that salary at all. It wouldn't even be reflected on his income tax return. If that's how they worked it out, I don't know. Since we're not seeing the documents, it's very difficult to ascertain the validity and the actual numbers and to do assessments, as you understand, Anne-Marie. But basically, if he is getting that salary, then under the current code, where he's able to write off 60% of that, literally just as a charitable deduction if he's receiving it in his name and then writing it off. And then, of course, if he has other losses, which seems to be sort of what the New York Times is really honing in on. Not, I think their point, they're trying to maybe make it seem like he's maybe not an effective businessman. He keeps losing all this money. But a lot of that, again, just like you said, we can't assess how much is depreciation and amortization of actual things that he's doing with his real estate holdings. So it's really difficult to assess, is he really losing money or is a lot of this depreciation? And out of the entire article, there's only one paragraph that actually addresses how much is depreciation, amortization, and gives us just one example, which I calculated myself, only shows really a loss of about $17 million a year for 500 entities in the period that they address the depreciation amortization. So I don't think that it shows what they're trying to maybe hope it shows. But then again, I'm not a layperson. I can really digest these numbers.
So you talk about depreciation. Over the years, the president has touted this strategy, depreciation. The New York Times goes into it in some detail, essentially saying depreciation is not a magic wand. The costs have to be actually spread out as expenses and deducted over the useful life of the asset. So, and oftentimes the president stiffs some of his lenders, or he removes himself from the boards of some of these entities that are losing money in an attempt to use this strategy. Can you explain to our viewers how it's actually used and how the president may be using it?
Yeah, well, that's exactly a really good point. So I think that's the biggest crutch of this entire article, is really this $72.9 million refund that President Trump basically applied for and received. And so what we're specifically honing in on now is the fact that in 2009, under President Obama, as a result of the Great Recession, in order to help businesses and to get the economy moving again, Obama increased the look-back provision. And I know this is so technical. I'm sorry. I'm trying to make it as simple as possible. It used to be that if you had a loss, you could only carry it back 2 years. So you could take a loss that was in the future and apply it to past 2 years of tax returns and get a refund. Well, under President Obama's Great Recession, sort of trying to help the economy, he expanded that to basically 4 and really 5 years, the 5th year being that 50%. So President Trump paid a substantial amount of taxes in 2007 and in 2005 and 6. That's when he was getting a lot of apprentice income. And so basically, he paid over $70 million of taxes. And when President Obama came out with this extension of the look-back provision, he took future losses, specifically in 2009, and went back and reapplied those losses according to the Times. I haven't seen these documents myself, and basically wrote off the taxes that he paid specifically 2005, 6, and 7, which included, which is about $70 million. And then when you add interest, it came out to be a $72.9 million refund. And then there was another $21 million of state and local taxes. So it was about $90 million, but to the feds, $70 million. And how he got that specific loss in 2009 was by abandoning his ownership in the Atlantic casinos. So basically what the Times is reporting is that he leveraged the abandonment of the Atlantic casino partnership position that he had and used that write-off to offset that $70 million and then get a refund because he had paid those in taxes.
So when you say use that write-off, are we talking about business losses? And can we just kind of like explain to people how business losses work to offset your taxes? Vlad, you live in New York, and often you see sort of empty, vacant properties, and you'll talk to real estate people, and they'll say, well, sometimes they don't, business owners don't mind a property being vacant for a few months because they can write that off as a business loss. So explain how that works.
Yeah, there's really no other possible way our tax system could work. In other words, it must give business owners and entrepreneurs who take risk some sort of benefit for the risk that they take. For example, let's talk about just a really quick example, a biopharmaceutical that takes millions and millions of dollars of research and R&D to develop a specific drug. So they've got maybe $20 million, just to use an easy example, $20 million of research and development in as a loss that they've put into this drug before it ever comes to market and they start making a profit. Well, if a drug company could not write that off against their future earnings as an R&D investment, then they would never invest because they would potentially lose tons of money and never be able to recapture that capital. So the government makes an incentive for business owners and entrepreneurs who take the risk that they're risking their capital. If you risk your capital and it doesn't work out for a few years on the front end, or even in the middle of if the economy turns, the airline shut down, if the economy shuts down, we will give you a tax incentive to stay the course and keep plugging away so that our economy just doesn't shut down overnight, so that when you start making profits, you can recoup your initial investment and become actually profitable. If businesses could not write off losses, then nobody would ever take the risk of going into business. So the tax code simply says, as you start to make money, we will allow you to reduce your taxes on the money based off what you've previously invested. And so that a business owner can actually make money and take the risk.
Yeah, it's so interesting because, the president, as you know, has so long been willing to make these tax returns available to the public, as most presidents have done, going back to Richard Nixon. And if you look at what the New York Times is reporting, given that there were some opponents of the president who thought that there would be some bombshell that he was beholden to some foreign power or some foreign entity, and it doesn't appear to be. It just appears to be a guy who's not a successful businessman, who loses a lot of money in his business ventures and exploits, or is it able to use our laws to not pay a lot in taxes? The whole thing is the president was always saying, I pay a lot of taxes, I pay a lot of taxes, sometimes not making the distinction between, the taxes that we all pay, like Social Security, and the taxes that he owes to the federal government on these businesses. So the question, of course, becomes, should he have perhaps just released them? And is it a big deal that the Times has these tax returns and is making them public? They are saying, of course, that the public have a right to know because he's the president of the United States.
Yeah, Vlad, a lot of layers there. Let me just address a couple things. It is telling that the New York Times doesn't release the source documents because as a tax lawyer, I can tell you if they were coming from the IRS, we would see IRS transcripts potentially. If they were coming from any kind of internal accounting source that leaked the documents, we would see, original files that looked like they were submitted by an accounting group. So it's telling that we don't see the actual documents, so we can't really start to ascertain their source. It is very difficult as a tax professional to read a summary by somebody else of summarized documents and make assessments. But what I can tell you is that there's a huge difference between what we call GAAP accounting, generally accepted accounting principles, which would be banks and financial statements that we would recognize, and tax accounting. And in fact, when I got my LLM from NYU for tax, I took a class specifically just on that, the difference between tax accounting and GAAP accounting. And the New York Times does seem to want to make an issue of the foreign taxes that the president has paid, and that he paid more in foreign taxes than he paid to the United States government. Well, this is normal in any kind of international organization. Anytime you're U.S. based and you're reporting taxes on a worldwide basis, we are the only country in the world that taxes income wherever it's derived. And so they made an issue of how much he's paying to Turkey, and not President Trump personally, but his business entities, 500, by the way, that we're speaking of. They paid this much to Turkey and this much to, all these other different foreign countries, but he only paid so much to the U.S. Well, it's normal that you report what you pay to foreign entities because you get a foreign tax credit. You say, okay, well, I made this, let's say I made 100 million, but I paid 2, 3, 4 million over to this country and 4 million to that country. Well, that money's been gone. So basically that is a cost of doing business internationally. You get a credit for that, and then you pay U.S. taxes on the difference. I just think it's a little bit, they're trying to really couch this a certain way. There's definitely a motivation that they want to show. And I don't think that we have enough information. And frankly, we never will. Tax returns don't give you a lot of true data. What business relationships, what revenue source, it's just a total lump sum, and you can't break it down by who, by what, by where. So there's a lot of speculation here. We don't have the source documents, but I think you're overall right. There is no smoking gun that I see in these documents. And we don't know if President Trump is a bad businessman, because like I said, in the one paragraph that the New York Times has where they take depreciation out, the entities only lost $17 million on average over this period of time where they took the depreciation out. And we don't know what period of time that was specifically. Could there have been a business recession? Could there have been, substantial things that were happening outside of what the returns show? So I can't even see from just this information that he is a bad businessman. And I would say that that's maybe not true. And so it's hard to say. It's really hard to say.
Well, Rebecca, this has been so eye-opening. I feel like I took an accelerated tax course
yes,
because it's really informative what you said and how you broke some of this down for us, because it can be complicated, and I think you shed a lot of light on it, so we appreciate it.
Thank you. Thanks for having me.
All right. Thanks, Rebecca Walser.